They are, and worse than what we had anticipated. If we just go back to what we announced at interim, we did call a weaker quarter in quarter three, primarily because the steel prices were not keeping up with the rise in raw material costs, particularly iron ore and coking coal, and that proved to be the case. But what did happen is as the U.S. and the Northern Hemisphere markets went away for their annual seasonal slowdown, markets just didn't pick up so much after that. So we saw a much worse picture in terms of steel demand as well. So put those two together, and quarter on quarter, we're not looking so good, although, of course, as you say, it's an improvement over the same time last year.
And of course, you're expecting this to continue through to the fourth quarter of this year. When would you expect to see a resumption in steel demand and slightly higher prices?
What we are not doing at this time is forecasting specifically for ArcelorMittal South Africa into 2011. We will publish that forecast at the end of the year. But at this point, we are broadly in line with World Steel Association, which sees a recovery in 2011 of something of the order of 5.5% in the early part. We would tend to go along with that. And traditionally, South Africa has tended to have a good first and second quarter as our markets come back from the seasonal lull over the Christmas period.
Would you still expect raw material prices to be quite sturdy, though, going forward from here?
What is strange is if raw material prices keep going up and steel prices keep not compensating for it, something has got to give. And that certainly has been our experience in 2010. It's going to be very interesting to watch what happens in 2011. All we can say is that that situation cannot persist forever, but when the turn will actually occur, nobody knows. But it is certainly been a feature of our market this year that raw materials keep going up, and we expect them to do something similar in quarter four.
How does the rand affect you in all this? Because you do point out in the commentary that the rand is 3% up from the June quarter. It's 6% higher than last year. I should imagine the strong rand must help with some of your input costs, although it does hurt with your exports.
Well, it definitely hurts more than it helps from our perspective. If we just look at on a quarter-on-quarter movement, there was a negative 313 million rand impact on our headline earnings as a result of the rand strengthening in the period. So a fairly small movement in rand appreciation has some pretty large impacts by the time it gets translated to the bottom line.
Of course, it's not just yourselves. Many of the construction companies operating in the industry have also complained about projects being put on hold, infrastructure projects not kicking off in South Africa. Are you seeing any signs of those things starting to come back into life?
Regrettably not. We have been poring over the reports of the construction sector companies, particularly the listed companies. We've been looking also at the cement companies, and that does not seem to be an early indication of a turn. But you must also remember that in the steel manufacturing downstream, we pick up an additional risk factor in the sense that finished goods become cheaper, and therefore the secondary manufacturers cannot compete effectively with imports. So we lose steel tonnages even to secondary manufacturing, quite apart from construction. So all round, the rand strength from our perspective is a wholly negative development.
Of course, Nonkululeko, you're also under pressure from government for the downstream industry, and that's really to pass on some of the savings you might get through preferential agreements with companies like Kumba to your steel prices for the downstream industry. And is there any concern that government could start to enforce lower prices for beneficiation in the downstream industry?
We've done a study for the 5-year period ending December 2009 to look at the benefit that ArcelorMittal South Africa derived from its iron ore contract with Kumba versus the support that we've given in the industry, either directly by adopting the basket pricing methodology as opposed to IPP, as well as from the rebates that we give to secondary exporters. And in fact, we have returned to the industry a sum total of 9 billion rand through a more favorable pricing regime and another 2 billion rand through the rebates on exporters. So from our perspective, we've certainly held up our part of the bargain in respect of support for the downstream industry. I just hope that there'll be more recognition for it. Yes, you're quite right. Government is taking a further look at steel prices and how those either support or detract from the support to the downstream industry, and we haven't had a chance to engage further on that score to find out what their thinking is on that up to now.
Of course, you renewed your cautionary last week, and actually, if the empowerment deal to sell 26% of the company to the IAGOBI consortium, so some conditions still outstanding on that. But this is a deal that's met significant pressure from some of your minority shareholders. Do you plan to push ahead with the sale of the stake, regardless of the opposition you're meeting?
What we have been doing, Stephen, is engaging in a continual dialogue with our minority shareholders since the announcement of the deal. A, to explain the rationale from the company's perspective, and B, to listen to what the objections may be, the concerns as they arise, and to re-look at some of the deal structure, terms and conditions to see if we can address some of those concerns. And let me concede that a lot of those concerns are perfectly valid. We have no problem with them. We've always enjoyed quite a good relationship with our shareholders, particularly our strategic shareholders in South Africa, and we have no intention of jeopardizing that. So our intention is to work with our shareholders to arrive at a position that they feel they can support.
Of course, something they'd like to be cleared up before this deal goes ahead is the controversy over the plan to buy Imperial Crown Trading, for that to be resolved first. Is this something you'd be looking at clearing up before you go ahead with the sale to the Empowerment Consortium?
Well, the two deals actually are not sort of conditionally, there's no interconditionality between the two of them, so essentially they are independent of one another. But clearly there is an interconnection between the two, given that it has common shareholders. So how one sequences that so that we meet the broad objectives of both is something that the board is taking a look at. But the idea would be to come to some sort of finality on the proposed acquisition of ICT sometime before the end of the year.